everyone, John Henry here, slingshotfutures.com, and welcome to the Market Mindset, where we take a look at the psychology behind the moves today so we can better understand it tomorrow. And today we're taking a look at the good old gold market. Now, gold has recently just kind of fallen out of bed, but when we first came in, we're looking at the market and we're thinking, wow, range bound, heavy range, we're not going anywhere, right? We had that huge burst higher, and then everything just kind of fell apart. So with the complete lack of conviction and the market just kind of getting stuck up here, we're going into a heavy range, and we need to be looking to do what we always like to do on ranges: buy low, sell high, stay out of the middle. Now, normally, I'm not a big fan of selling against a big upward move like we have going on gold over the past little bit here, but we're actually coming into one of the big levels of resistance that we've been talking about in the room for about a week now, and that would be at around 63.7, a little bit lower, maybe around 62, and just smacking into that resistance. So with that huge level coming into play that we've been talking about, that gives us a little bit more clearance to say, you know what, this is a massive reversal area on a bigger time frame. I don't so much mind taking a sell around here to push the market back down. We can still buy low, going with the longer term trend, but selling is definitely still on the table because of that huge resistance. And that's really the only options it gave you today, because when we tried coming in, we had a nice push to the upside, and by the time we saw the move up, we're already at the highs, right? We're at the highs of the range. If you wanted to zoom out a little bit more, I suppose you could say the range might be a little bit shallower on the bottom edge. Certainly not the best looking thing in the world, but the range really fits right around here. And with that range coming into play, cycling off of the highs, we have a really big distrust of the bullish move. There's no reason to believe the buyers right now, given location. And the initial response is bearish as anticipated. So with that selling pressure coming in as proof, we wait for the buyers to give it one more shot. It completely fails, never even triggers in the buyers there, and then turns back down. That is a selling signal to drive the market back to those range lows. And it worked out quite nicely. Now, before it hit the overall lows of the range, it actually had a quick short-term bounce with a 2-candle pullback back inside of that previous high of day. Little bitty bear bar. And the reason I like that small bear bar is the fact that the risk is so small. You can sell a small candle like this. Your risk is here, and your target is easily 1-to-1, and that 1-to-1 target is still ahead of those lows. There's plenty of room for the trade to work, which you normally don't get. Now, the next one is a little bit harder because you don't get that benefit of extra room. I have this one marked up for a couple reasons. First of all, we have a one-tick trap of the highs. That is a huge clue. They still missed the high of the range, and we're still looking for a cycle down to the range lows. But selling this candle is going to be for the aggressive traders. I wanted to mark it up because I know a lot of traders did end up taking this, but it is on the more aggressive side. You're selling without a whole lot of room at the bottom. Obviously, hindsight, there's plenty of room, but we didn't know that at the time, right? You're selling into the lows of the range. That's a very dangerous situation to put yourself in. So larger accounts that can manage a little bit of extra contracts on the table would be able to take this without much of a problem. And those traders that did take it were rewarded quite well. For me personally, that's not a trade that I would really like to take. I would rather wait for a little more confirmation, but I wanted to talk about it because a lot of traders did end up taking that one. Overall, a great day on gold, even with that range-bound start. If you were patient, paid attention to those big areas of resistance that we've been talking about in the room for a while now, going on probably a week or so, that gave you the opportunity to sell, and if you hung on to it, it paid very well on that drive lower. So that's going to do it for today. Hopefully you learned something. Hopefully you found it interesting, maybe a little entertaining, and we'll see you next time.